Sydney unit prices are falling. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from ABC News discussing. So a report shows Sydney unit values shrinking as house prices reach record highs. And we'll be looking at that in some other articles today about just the surge in house prices. But units are falling down. And, well, you'd hate to be in some of these investment quality units, everyone. Particularly in Sydney. So house prices in Sydney reached a record high at the end of 2020. Fantastic. Our first recession in 28 years and house prices are at record highs. Completely natural. Completely natural at all. Nothing to see here, guys. Nothing to see here. But the harbour cities' units have lost the most value of all capital cities according to a new report. The median house price in Sydney in the December quarter was median 1.12 million after a jump of nearly 5%, the Domain report said. That is about 13,000 above the previous peak in the mid-2017s. First recession in 28 years. Okay, just remember that. We're definitely in a two-speed economy here, everyone. This is just going to exacerbate the gap between those who are in the property market and those who are not. But the gap between houses and units in Sydney continued to widen, the report showed. The value of units in Sydney fell about $20,000 from pre-pandemic levels, the biggest loss across all capital cities. If we jump here to SQM, we can see all units, the asking price on January 2021 was at $670. And if we go back in time, did we hit it there? Nope. We go back. 2016 levels, roundabout. So, you know, if you bought in 2016, okay, but if you bought 2018, you wouldn't be too happy. 2018, you're down, what, 740 grand, down to 670. So you're down 70 grand. Then you add all your stamp duties, your cost, your real estate, your legal fees, 100 grand. Domain senior research analyst Nicola Powell said the housing market had defied the odds, with pessimistic forecasts made earlier this year failing to come to fruition. Well, it's because we've had significant intervention in the market. We've got a cash rate so low, even when I update this chart, you can't see the change. 0.1%. That's completely natural. We've got mortgage holidays. These things didn't exist back in the day in the last recession. So maybe that's the problem. We're thinking too rationally when we're saying, okay, there's going to be a lot of people in financial strife here, a lot of people overcommitted. What's going to happen? So, the COVID-19 pandemic had changed lifestyle preferences, she added, with regional New South Wales outperforming Sydney. I think with the ability to work remotely, we've seen it drive demand to outer suburb locations, but also regional areas as well, Dr. Powell said. Significant government support measures, a remarkable rebound in consumer confidence, mortgage holidays, and a reduction in property market activity during the lockdown period influenced last year. Significant government support measures. That's why I'm thinking more and more the pieces we saw coming out of the RBA predicting, modeling a 40% fall were done with intention to influence our politicians to intervene and prop up the housing market. Do you think I'm, have I got my aluminium foil hat on, guys? Or do you think that there's a legitimate chance of that happening? I couldn't see our glorious unelected overlords at the RBA who can instantly reduce all of our wealth ever doing something so manipulative. They don't think they know better, do they? All those things together did help to support prices, but the dip in price we recorded mid-year was short-lived for houses, she said. SQM Research Managing Director Lewis Christopher said Domain's numbers were a little stronger than other data providers, but there was no doubt it was a strong quarter. Prices in Sydney and Melbourne increased by about 2 to 3% on SQM figures, he said. But SQM had recorded dwelling price rises in excess of 8% for the quarter in regional New South Wales and Queensland. That's extraordinarily strong and illustrates the heat that's occurring right now in Australia's regions. And we're seeing it in the comments even on this channel of people who are trying to sell up in the regions and it's just going hot. People want to get out of the cities. People want to get out of the cities. Mr. Christopher agreed. Working from home arrangements partially explain why houses outperformed units, with people seeking space and privacy. Well, you want a backyard, you want space, you want room to breathe and move around. Imagine if you were stuck in a studio apartment during these lockdowns. What if there's two of you living in a studio apartment? He said a housing crash was averted in 2020, largely thanks to government grants. We had high unemployment, we had a recession, we had the closure of international borders. All of those things would normally spell disaster for the housing market, he said. Exactly. So what's the government do? The government is intervening in the market to prop up the sector. And who pays for it? Well, not the generation now, not the people who may perhaps have, stretched their ability to pay a little bit too far. Future generations who bear the burden. The government is just borrowing money. The RBA is just cutting rates to nothing, and that creates a bubble in the housing market. You get the candle-on effect, everyone. That's where the money, this new supply of money into the economy is the path that it's going through. So you get a bubble of housing relative to other parts of the economy. And don't worry, it's not going to be captured in CPI, because then the RBA would probably be meeting their targets, and we wouldn't be in such a bloody mess that we are now. And future generations are going to continue to struggle to get into housing. And that means you'll have a population here that some people, understandably so, won't feel settled enough to raise a family. And then, oh, look, our population growth is declining. Okay, bring in everyone. There you go. It's just one thing to another. But don't worry. Don't worry. People who got in years ago in the 90s, who've sat on their ass and just reaped all the rewards, who got lucky. I'd love all these property geniuses to transfer these skills into another sector. Maybe something that's a little bit more innovative, that will leave a lasting legacy on the country other than inflated house prices and a decline in other industries and other businesses. I can't blame people for not wanting to get into business and build something up and take on all that pain and hassle when you just buy a house, sit on your ass, and you make 2 years worth of income in a year through property growth. It's the Australian way. So nationally, house prices in all capitals, except for Darwin and Perth, hit a record high according to Domain's data. Earlier this month, CoreLogic placed December's median house price in Sydney at $1.01 million. The median unit price was $733,000. So $1 million for a median house in Sydney. I make the mistake of watching Dave Ramsey. I quite enjoy his radio show, and particularly when the people call in and they do their debt-free scream, how they've paid off their house. And, we paid off 180 grand. We paid off 150 grand. We paid off 200 grand. Here you've got $1 million Australian, even if you adjust it for USD. It's nuts. It is just nuts. Housing is so expensive in this country. Let's jump over here and have a look at some other cities. Okay, let's look at Brisbane. Let's look at my city here. Okay, Brisbane. So housing now, there you go, all houses, 656,000. So down in 2010, in 10 years' time, there you go, it's over 100,000 growth. Property. Does it double in every 7 years? Well, no, technically it doesn't. It hasn't doubled in every 7 years, which is what they say. But you've gone up from 2010, 60 grand, and then you're up here. Look at units, 380. Let's check out Melbourne, guys. Melbourne, who suffered the most from these lockdowns and these restrictions. There you go, look at that. Oh, Melbourne's at over $1 million too, asking price. Not median, but asking price. Here's the thing. If we go to the ABS, the average weekly earnings of $1,713. Let's say we'll go to CBA home loan calculator, just for argument's sake. Okay, or Ubank have got a cheap one too. Let's say you're earning $1,700. But there you go. That's you should get in the public service, guys. What's this? This isn't the CBA one anyway. We'll calculate the repayments. Let's say you get a $800,000 loan. We'll just do fixed 2 years, calculate that. So your payments per fortnight are $1,487. Weekly, $743. So if you're on, if you're on before tax, the average weekly income of $1,700. This is why you need to do it. No, sorry, I'm not interested. But this is why you need to do it. This is with insanely low rates. So people have to work bloody hard to build up a deposit just to get in. And that's less money that they can spend on other things. And forget the fantasy about having one partner staying at home. That's a luxury of previous generations. That's gone now. The market was going to correct. We had a once-in-a-lifetime event that could potentially have disrupted the market, but your political leaders intervened in the market. Our central bank intervened in the market. They artificially intervened in the market. If you don't have corrections, if you don't allow the market to correct, you remove opportunities. This is the thing. You're just pumping up a Ponzi scheme. They're going to inflate away our money. It's just another tax. So what do you all think, guys? Are you all surprised? Let's just wait to see Mortgage Keeper for unit holders. Anyway, guys, thanks for watching. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all next time. Bye for now.